Hey folks, Dan Frio here with your market update for March 9th, 2025. This is the opening bell and it looks dismal. If we go over the stock market, the Dow Jones and everything is down, not as bad as it was previously. Look at the bond market. The bond market is down 63 ticks. That means mortgage rates might go up 0.25% today. Why? Well, we're going to look at the economic calendar for that, but some good news behind this is it looks like the Federal Reserve might be cutting rates sooner than we expected. So without further ado, let's get to today's news. So like I said, my name is Dan Frio. I do this report 2 times a day to inform you guys what's going on with these things. You have to pay attention. If you're a homeowner or you're looking to buy a house, you got to pay attention to these things because as rates dip, you got to take advantage of these lower rates, folks. If you're a homeowner, if you're a home buyer, that's a different story. It's hard to time these markets. But I'm going to give you all my information at the end of this video on what I do because I'm actually a nationwide mortgage lender. Yes, I'm a mortgage lender throughout the entire country. And our slogan here is pretty unique. It's one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how do we do that? That's what you guys are probably trying to do on your own. You're thinking, okay, I need the best rate in town. But before you go there, you need to make sure you're working with somebody who knows what they're doing, has the products you need, and the knowledge as well as the rates. So without further ado, let's get over to it. Mortgage rates went up a little bit yesterday. I think they went up a little bit more than that. But let's get to today's news. It's all about tariffs, and retaliation. So here's what we're seeing right through here. Jamie Dimon even just came out. He's one of the probably the grand poobah of bankers. And he said, most likely there's going to be a recession. So because of that, now you're having the markets just go in complete turmoil. Another piece of this is we're going to look at the bond market here real quick. And China just slapped an 84% tariff on the U.S. And I'm digging into these details because I'm trying to figure out who that's really going to hurt, what manufacturing piece of that is going to really hurt. But I want you to understand a little bit about how the bond market works and why this is such a concern. So it came way roaring back. So here's what's happening behind the scenes. So on the international front, I want you to understand bonds a little bit. Okay, so what happens is, for example, like with China has enormous amounts of our debt. So what happens is when they send their stuff over, to us as imports, we buy their stuff. We buy it with dollars. The money goes back to China. Then Chinese companies have to distribute that money or exchange that money with their central bank, okay, to get yen at that point to then do what they need with their own money. Well, then their central bank normally it might flush it back through the system, but they'll buy U.S. Treasuries. Why? Well, they're a secure investment. There's basically no chance of default. It's probably one of the world's safest bets when it comes to bonds. So when they do that, now this is going to cause maybe retaliation in this area. So they're saying, okay, maybe we won't buy your bonds. Who's going to buy them? So what happens is we know when the bond market, kind of like the housing market, when there's too much of something and not enough buyers, what happens? Well, the prices deteriorate. What happens when we know when this thing, the price of a bond deteriorates? The yield goes up, and that's what we're seeing right through here. That's the only really explanation I can have for today because there's really no economic news out. Now, we do have some inflationary numbers coming out tomorrow. That's the CPI, and then the next day, the PPI. Let's get over to the economic news, and I'm going to show you this. But then I want to go over with you the economic, the estimates from the CME FedWatch tool. Now there might be a chance that the Federal Reserve might be acting, but it's not because of, inflation or anything. It's basically just retaliation or just helping the economy at this point not go into a recession or a depression. I don't think that's even possible. But let's get over to today's news. Wednesday, we have crude oil inventories. Not going to affect the market, but we do have a 10-year Treasury. I'm going to focus in on meticulously today. It's at 4.3 previous reading. What's it going to go out today? It's probably going to go in the 4.5, 4.6 range. That's not good when it comes to the auctions. Then we have the FOMC meetings notes. So the last time the Federal Reserve met, they talk about things. They come out and tell us what they did and everything. But today we're going to get their notes, kind of the behind the scenes, what they truly talked about, behind closed doors. Don't think there's going to be much there to really dissect. I might be surprised there. But then tomorrow's when the information starts to come in that this way, the Federal Reserve used to pay attention to, like inflation. So let's get over to here. We have continued jobless claims coming in tomorrow. Is it going to stay below 1.8 million? Hope so, because that's a good figure there. But then we see all these numbers through here. So let me explain this to the newbies out there, what all this is, because it says CPI, YOY, MOM, core, whatever. So let's take this little batch right through here. Okay, this is the inflation that I watch, okay, and this is probably what you watch. It's consumer inflation. How much more am I paying? Okay, core means it strips out food and energy. Why? Because you could see oil prices. Let's go over to the chart. Oil prices, what's it doing today? Oil is down $57 a barrel. That's fantastic. when it comes to inflation numbers. This was $72 or something like that, 3 weeks ago. So this is 4% down from there. So we're probably down 10, 15%. That's going to help inflation. Then you're also going to have the housing equivalent of housing rent or whatever they call it in the CPI. And that should be coming down as well. So there might be a big surprise when it comes to the CPI on this reading. So let's go through it. Core CPI, like I said, means it strips out food and energy because it's really volatile. YOY obviously means year over year and month over month. So last readings were, over through this column. They're expected to go up a little bit on the right through here, the month over month. I'm going to be a contrarian to this. I think some of these numbers are going to come in real nice. The CPI year over year, look at this one. Last reading was 2.8. Now it's coming down to 2.5, coming down real nice. Okay, so this isn't going to be the worry, I don't think, in the markets right now. Well, I know it's not going to be. It's going to be all this, the tariffs and just the unknowns of things, because even China, with them slapping on their tariffs and everything else, is basically, what's it going to affect? What is it going against? We don't have all the nitty gritty details. And that's why you're seeing huge fluctuations in the market. Look at this. You think this is usually like a stock price. This is NVIDIA down, 300 points one day and then up. But this is the bond market. Usually you see it slow and steady. Here, let me go out to them. Now, this is even going to be bad. No, that's not even good. So remember, these are when rates were like crazy low. And then this is where we are. So when this number goes down, rates are going up. Okay, so that's what you need to understand there. Let's get over to the CME FedWatch tool. What the Federal Reserve is expected to do. If you can go to this on your own, you go to the CME FedWatch tool. In 28 days, the Fed's going to meet. What are they going to do? Well, some interesting numbers just came out. Right through here, the federal funds rate right now is 4.25 to 4.5. So if you look over my head, that's what you're seeing right through there. But the number isn't there anymore. This was about an 80-something% chance right through there that the Federal Reserve was going to cut rates. Okay, we're at 4.25 to 4.5. We're in this column right now. Now it's saying that the May meeting, there's a 50% chance the Federal Reserve is going to cut in the May meeting. If not, for sure going to cut at the next meeting. So that's what we're focusing in on right now. Are all these things possibly going to change here soon? They could. They can change on just a stroke of a presidential pen, I guess, is what you could say. So that's basically what we're seeing so far today. This is the things that the Federal Reserve monitors. So if you're really, where to go? Let's go up through here. This is the things that the Federal Reserve monitors. They want to keep track of inflation, the unemployment rate, that we're going to get some unemployment numbers this week, and the GDP. This is coming in. This is starting to deteriorate a little bit. That's why a lot of people are saying we're in the brink of a recession at this point. So are we there? They said that about 2 years ago. It didn't come to fruition. Is it going to come this time? We're going to pay attention. We're going to watch it, and I'm going to be keeping you abreast of all this on a daily basis. So that's our report for today. But before you do anything, I want to explain who I am and what I do. But first off, please keep watching, because I ask every person that calls in if you've done this. So here's what we want you to do before you do anything. I don't care if you're out there looking to buy a car or a house and you're going to use us or not. Go to Opt-out Prescreener. What this is going to do is going to stop the credit agencies from selling your financial data. It's called Trigger Leads. If you want to learn more about it, check out one of my videos that talks about Trigger Leads. But there's no cost to this. The credit agencies put it together, and you're going to thank me in the long run. But who am I and what do I do? Well, my name is Dan Frio, and our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. You need it in today's market because, folks, here, let me explain to you kind of what happens. You have volatility like this in the market. I don't care if you got a quote yesterday evening. That quote's no good today. So you're going to have to call back that bank, then call back the other bank, and compare the offers, and then do this. If you got the time to do that, God bless you. If you want me to take over that heavy work for you, just go to therateupdate.com. Here's our website. You can check out all the information above. If you want to put in your application, right over my head, just click the Apply Now button. Or if you want to schedule a consultation, you can do that right through there. You can give us a call up through here. We have two big pieces of this website that I really want to bring to your attention. If you're a new home buyer, please check out this video. It kind of steps you through the process on how to buy, some pitfalls and things like that you should really pay attention to. I think you're going to find value in that video. And if you're a home owner and you're looking to track these interest rates to find that bottom and not miss it this time, go to the RateWatch tool. And this is what you're going to do is you're going to put in all your current information. And then when the rate goes, let's say, for example, you closed and you were at 8% back in December of 2023. Yeah, they were 8% back then. Now rates are 6.75 or ish, and you can save $400 or $500. Just let me know what rate you want me to call you at so we can get the paperwork started on your refinance. So that's that, folks, and that's my report for today. We will be live this afternoon at 3 o'clock Central Time. to try to explain all this things to you, and for you guys to ask me questions on which your concerns are. So check that out. That's at 3 o'clock today, but I will be back at the closing bell to let you know how this mess ends for the day, folks. So good luck out there. Be safe and stay calm. We'll be back later today to answer any questions that you have. God bless, folks. See you then. Bye-bye.